under trading newsletters.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the terrific Tuesday, the Turnaround Tuesday edition of today's Trader's Edge show. Today is March the 24th. Hope everybody out there is having a great day. Hey, let's make sure we have an extraordinary day. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what the buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now we got all the indices in the green. The Dow's up 1,500 points, a little over 8%. That's a positive. You actually want to see the Dow coming off this bottom, taking the lead charge out there. And the reason is because the Dow is really the trophy horse, so to speak. And if the Dow is leading, in essence, it may be signaling to us that international capital flows are beginning to show up there. And I know I have said before, and I do mean this, that bullish markets perform best when the NASDAQ, ANDX 100, and the Russell 2000 are out in the lead. But at this stage here, what you and I are trying to sense is capital, which had been moving into the U.S. dollar index, pulling back a bit out here, moving into treasuries. Is that now starting to pour over into U.S. blue chip equities out there? So that's what we want to watch for. But you and I are going to go take a look at the technical patterns that are in place out here. And where do we start? So I think the place to start out here is perhaps the most unusual thing that is in place right now, especially with the rally that we see going on, especially with the S&P up 161 points or 7% out here. And this is the thing that says caution, Will Robinson, or whomever. Many of you don't even know who Will Robinson is. But if we take a look at the spot volatility index, that's what I want to take a look at with you first. And what I want you to notice here is that, well, first let me do this. So I've been sharing with subscribers, the positive aspect about the spot volatility index from this standpoint, that it looked like this had topped. Now, why would Stevie say that it looked like this had topped? Well, if we take a look at the TD9 count pattern, it was bar number 9 that identified the high. Now, we know in this pattern, if it works, that it's usually bar 8, 9, or the bar following that. In fact, the last time we saw a high inside the spot volatility index back in the end of January, it happened to also be with the TD9 count. Now, in this case here, we had two patterns. We also had the Rhodes Momentum Indicator signal. That was confirmed with that little dark cloud cover. Now, not to be confused with Basil's dark cloud cover workshop. That wasn't about the dark cloud cover candle out here, and that was a signal of a top. Now, the signal of a top says I'm just going to go try to push price down to support. The first level of support inside the spot volatility index was 68. 38, well, that's what it's printing at right now, was Stevie's green line. We saw a close below this on Friday. Yesterday, another close, two closes below that. And this is going to suggest to us that price moved back to 40.84. Now, what this chart doesn't show, and that's kind of interesting, I wonder why. Was there a bad tick? Does anybody else? I won't do that here. Let me pull this off screen. Usually there's not a bad tick data inside my eSignal platform, but maybe there is. Anybody else show out here. Let me reload my historical data there. Does anybody else show the spot volatility index moving down to a low today of 36.24? And I'm really referring to the folks that are inside the den. I know a number of you track the spot vol, because this is what I look at well, first of all, the spot volatility in an absolute bullish market. So if we're trying to understand, is this a sell the news event that is going on? Is this the bottom? Was yesterday the bottom? Thank you, Peter. So Thinkorswim has the exact same thing. I don't know. Oh, and I've got, now that I've reloaded my data out here. So it's kind of dangerous. If this was thank you for looking that up out here. So once I reloaded this data, so the unusual thing is that what the spot volatility index did was it moved all the way down to the 50-day exponential moving average. And that's really important. Well, it's really important that the spot volatility index closed below that. Now, the day's not over. I know it's showing a hammer candle right now. Hammer candle coming back to support is suggesting that it wants to move higher out there. And so what I am absolutely suggesting to you folks out here, because I'll show you all kinds of signals and patterns that are suggesting a bottom out here. But here, let me show you this. Maybe we're all visual when it comes to learning out here. You may be taking a look at this and you're saying, Steve, I really don't even understand what in the Sam heck you're saying out here. Well, you'll understand it when you then take a look at this chart. Generally speaking, we take a look at this chart right here. Generally speaking, and this is a chart, this is a daily time frame chart. This is the S&P 500 in the top. And this is the spot volatility index in the bottom. The red line is the 50-day exponential moving average. So generally speaking, if you take a look at the yellow box areas, those are time periods where the spot volatility index is above its 50-day exponential moving average. The green boxes, rectangles, whatever you want, whatever shapes that I've got out there, those are time periods where the spot volatility index is below the 50-day exponential moving average. This is the simplest of all tools for any type of a trader out there to be able to interpret what the message of the markets is. So Tom says that was a bad tick. A bad tick just coming through to all of us out there? Well, if it is a bad tick, either way, what I just said still holds true. And thanks, Tom, because even if it is a bad tick out there, where it's trading right now is well above that 50-day exponential moving average level out here. Now, this is not going to be a tool that's going to help you to call the bottom or call the top. But generally speaking, at this stage of the game, this is not what we would have expected. That's not what I would have expected. Maybe it's what you would have expected out there. And so this suggests caution, or at least in my mind, this suggests caution. Now, what I also want to do, let's take a look short term what's going on out here. So just so you can anticipate what the markets are doing. And maybe the markets are just simply waiting for the Senate, for the House, for Congress to get its act together out there. Man, you don't want to hold your breath when it comes to those fools. All of them. All of them. All of them. All of them. Fire them all. That's the last thing that I'll say out there. But for God's sakes, look. So let's take a look at the 30-minute time frame chart out here, just so you can anticipate what the current message of the market says. We've got a confirmed Rhodes momentum indicator top on a 30-minute time frame, and price is below Stevie's green line, 74.53. We should see the ES mini pull back to about 73.36. To maybe even 72.57. I'd say 73.14 would be a good number. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So just kind of like when we were taking a look at the daily time frame chart for the spot volatility index, the tools that I use work for all time frames out there. When you get confirmed tops, then the next thing that you do, so this is just a 30-minute chart here for the NQ, and the NQ really being the leader, so this is really communicating to you and I, in my opinion, it's communicating to you and I. And so when we get that bearish reversal candle, confirming the Rhodes momentum indicator top, and then price begins trading below Stevie's green line or red line, depends on where the price oscillator is located, above zero or below zero out here, then tells us that price should move back to the next level of support. And those levels that I gave to you were the top, center, and bottom of the current profile. Look, if price trades below 72.57, then I'm saying that's going to happen. But you got to watch. I don't know what the market's going to do. I do know that if you see price trade below 72.57, the bottom of its current daily profile, on a closing basis, not on an inter-time bar basis, but on a closing base, 30-minute, then you're looking at 69.53.50 out there. If we look at the daily time frame chart here for the NQ, what we're going to see here is at this stage here, it's only been a counter trend rally. We'll change that view if we see price close above Stevie's red line. But we've been down this path before. We were down this path. I need to update this. Son of a gun. That's the problem here. So it must have been something went on last night, because I know that's not right. That was from 2 days ago. So give me a second here to update this, and then it gives me the data in a moment. Shoot, I could just switch over. There you go. So 2 days ago, so I take that back. Okay, great. So right now, the NQ on the daily time frame is signaling to you and I a bottom pattern right now at 120. And the reason that it's doing that is because price is trading above Stevie's red line. Now, that price point out here is 73.20 as we speak, which would be another potential level for price to pull back to. So I don't remember the numbers I gave you on the 30-minute time frame chart, so you kind of have those jotted down on a pad of paper out here. But what you're really looking for today is a close above Stevie's red line. Now, you'd like to see 2 days above that to at least suggest that there is a further rally, or that yesterday could have been a bottom, or a counter trend move out here. Those are the things that we would be looking at. If I look at the weekly time frame chart here for the NQ, let me repopulate. We looked at this yesterday, I believe. Price did pull back to a weekly level of support. That was in the 6612-ish area. That was a breakout area. On a monthly time frame, let me populate this here, price never got down to its breakout support level, which is very, it's one of the reasons why Tom, David, Basil, probably everybody, Larry, and I haven't had today's marketplace, I haven't had time to really listen to too much out here. But you can see here why it really is the strongest. It still hasn't broken back to long-term, on a monthly basis, long-term support out there. Now, that's different when we take a look at the other futures contracts. So if we take a look at the ES Mini out here, give me a second to populate that. I know Peter in the Den had requested to go take a look at that, and I'm not going to get any good monthly time frame data. But here, what we can see is so far the ES Mini has given us just the counter trend signal. Counter trend signal is getting up to Stevie's red line and closing below it. Now, if price can close above it, the ES Mini, that level is about 2410 is what we'll call it. If price can close above that, then what we should see is a further rally unfold. Now, on the 30-minute time frame, out here, just like we did for the NQ, let's see what signals popped up here. I've got, it looks like it was in wave number 7, so not a Rhodes momentum indicator top, but I've got wave number 7, price trading below Stevie's green line, a new profile that's in place. If 2375 doesn't stop the move back, then we should see a move back to the 2343 area inside of the ES. Thank you, John, on the Tiger's Den, who posted some of the new pivot points. I haven't gotten a chance to do that. He's suggesting 2372. So that'd be another area to be watching on a retracement. You'd like to see price hold that area out there. So that's what I see when I take a look at the ES, the NQ, and again, that spot volatility. So for longer term traders out here, do you hop in right now? All that I can do is I can share with you, and I will put this up on my screen again because I think this is very important, is just simply taking a look at, generally speaking, the way that the S&P 500 behaves from a pricing standpoint in relationship to where the spot volatility index is trading. It has nothing to do with the number of what that spot volatility index is trading at. Right now, it's at 60.01. The 50-day exponential moving average is 38.19. If price were to pull back, that number is going to fall just a bit, but it's probably in the 35 level out there. And it wasn't too long ago where if we told somebody the spot volatility index is trading at 35, they would be like, oh, my God, you got to be short the market or something like that. That's absolute BS. That's before Steve shared with you the tool of using the 50-day exponential moving average and an understanding where that is trading on spot volatility index. And just looking at this chart here to give you the best general idea of when one should be long or short. Now, I'm not suggesting that you go short right now, although take a look at that ES Mini, if it and the NQ, they all close back below Stevie's red line out there. That could easily set up another move to the downside. Yeah, I know. Now, let's take a look at both the positive and the negative out here. Let's take a look at some positive. Jay, I know for you, I know that you would be asking here, there's some new profiles out here. And on my system, using that advanced Doppler tool, even if price does close above Stevie's red line for the ES, the NQ, the Dow, Russell 2000 at day's end, we have potentially new resistance areas. Now, I'm using my Super Doppler tool out here, so it picks up early signals, Jay, and everybody else out there, of potential new profiles. This formed last night at 6 o'clock, and what's nice here, and they have shifted. So last night, and so because they're shifting, I don't know how valid it's going to be. If it takes hold, I don't know that probably this evening at around 6:01. When I say it's shifted, I'm going to turn price off. So yesterday evening, the center of the box was very close to the bottom of the box. which would provide you with a bullish profile, which would then suggest to me that once price got over the center, you should see a run up to the top of the profile. And that would be the 2540 area. We're trading right now at the center of the box. So it's as if the market is just waiting. It's right where the point of control, right where you have both buyers and sellers. That's what the center of that box means. It means that in this range, which would be 2226 to 2540, that's the level where buyers think that it's fair value and sellers think that it's fair value. And that's why we look to see who's got the upper hand here. Well, actually, that center of the box has drifted slightly higher to the top of the box. It's a fairly wide range out there, but that's really reflective of today's markets that we're looking at out here. So if you're asking me from a market profile standpoint, what's the message? Right now, it's neutral. Maybe it's kind of it's doing the exact same thing that I'm doing with you and going back, and it's maybe in its mind, it knows where Stevie's red line is at. It knows it so far, with the exception of the NQ, that it's resistance out here. Maybe it senses that, man, that spot volatility index isn't really acting the way that we would like to see it for such a move higher in the markets, and a reason to be cautious. If we take a look at the other profiles, the NQ is solid. That's been in place for several days out here. And that resistance area, 77.59, 77.60. Boy, a close above that would signal a nice move higher. Right now, that's its resistance level. Steve Rhodes with TFNN. Be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's go to a couple of emails that have come in. I don't believe I have any callers on the line. This one coming in from HD. And HD writes, Apple showed more weakness than I was expecting over the past few days. Is there some large overhead resistance somewhere around 250? So HD, as we take a look at the daily time frame chart here, yeah, there is overhead resistance, so to speak, at Stevie's red line. That's at 246 and change. Right now it's printing around 246.62. And so Apple does show, so Apple generated a bottom signal yesterday. It's using the Rhodes momentum indicator signal. It generated a hammer candle. And what you do have today, HD, is you have follow through. In fact, you have so much follow through that we also have a Three River Morning Star pattern. So the last three candles. So even though it's, and I agree with you, it's showing some weakness, not from a bottoming pattern standpoint, but the weakness is that price has been unable to overtake Stevie's red line. And so the NQ would really get some mojo. Now I don't recall what weighed in. I mean, I think Microsoft is 1 and Apple's in the top 5 out there inside the NQ. But in order for, if you're going to use Apple as a guide as to what the market's intention is, well, then you're going to need to see it close above Stevie's red line. Otherwise, that red line, and you can see since the move down, in fact, where you can really see it is that first counter trend rally that we got inside the markets. Then I'm referring to the one that was about a 1,700 point, 1,800 point day or something like that on March the 2nd. Apple the very next day gaps up, test Stevie's red line. We were anticipating that test, right? Because the color of the oscillator and change line had changed from green to red, so it covered that phenomena, and basically just simply the bottom fell out. So you'll want to watch Stevie's red line. It's not at 250. Maybe as price moves up, it gets closer to that level out there, but a close above that HD, well, that would be a bullish thing. Has Apple generated bottoming signals? Absolutely and positively. And now what it needs to be able to do is close above that level. So I hope that helps you out on a weekly basis out here. What's Apple doing? Well, right now it's regained its TD9 breakout level. Remember, we like to use, or I like to use, 2 bars as confirmation of a break of support or resistance out here. So on a weekly basis, we're now in that second week. Now, if price this week on Friday, it's only Tuesday, it's only turnaround Tuesday. It can't be Taco Tuesday unless you're making it at home, because we can't go out to get those. I guess you'd go to Taco Bell, but man, that could be dangerous. You could get you sick just from that. In any event, I'll hold the comments about some restaurants to myself. But of course I didn't. But look, as long as, if Apple can close back above 237.26 HD, that would be a nice positive for it as well. I would say that the breakdown was a false breakdown, and that price on a weekly basis just came back to support. Now, this also had the Rhodes momentum indicator. Remember, price is supposed to be able to move to a support level, which it did last week, closed below it. We'll see where this week ends its session. And if we look at the monthly time frame chart, price well above its breakout area. If everything were to fall apart, what you would be looking for would be a move down to about the 169.50 area inside of Apple on a monthly basis. That is its breakout area. So I hope that helps you out. Thanks so much for writing in. We've got another. So Eddie wanted to also take a look at Apple. But Eddie, you also want to take a look at NVIDIA and Boeing. So let's go do that. Let's put up NVIDIA. Now I'm going to do this here. Give me a second to just slide this over, because I think for some reason, I don't know what that reason is. I need to update the charts. That will just simply stall something. But I can come back here on my black background charts to go ahead and give us the profiles out here. So we take a look at NVIDIA. Hold on a second here. Reload all historical data. Here's what we know. Looks really good on the weekly and looks really good on the monthly. When I say really good, what I'm referring to is prices trading above support. That's the top of the profiles. So on a daily basis, that's where the rub is. The rub is price is below the bottom of its box. And so it needs to close above 256.70 to really get inside the range of that profile. And if it gets inside the range of that profile, you could see it move up to, well, the next move would be 271.60 and then 286.51. So that's what the profiles are telling us. Let's go take a look at some other signals out here. So you're trading at 245 and on the daily, and why didn't my chart update? Golly gee whiz. Willikers out here. Because it looks like price is above, man, what a bummer. That's really weird, really weird. Let me try it on a different set of tools. Give me a second here. This is how life happens for us, not to us. And it's just making my life just slightly more complicated, but that's okay. NVDA. Let's see if I get it to populate correctly on my other screen out here. And in the meantime, I guess what I need to do is tell a joke. There we go. We got it. Okay. So I got it in the other system. Okay, perfect. So let's do this here. So NVIDIA. Oh, so this is so Eddie. NVIDIA several days ago to 4 days ago formed a TD9 count bottom. So you've got the valid bottoming pattern in here. And now today, what price has done, it's trading above Stevie's green line, red line. 227 and change, 227.75 or so, is the level that it needs to close above. And this is suggesting to you and I that what NVIDIA is going to do is go target its breakdown level. And that's 268.39. If price can overtake that, then you should see NVIDIA make a run for its highs again, its all-time high. So resistance on a counter-trend rally inside NVIDIA is going to be the 268.39 level. Now, you'd also asked about Boeing. So let's go take a look at Boeing. BA is the ticker symbol out here. Let me get that going on my white background charts. Let's come over here, see what's going on from a profile standpoint, see if anything has formed out here over the past couple of days. And voila. So here's the daily time frame chart. Take a look at their profiles. What you see inside of Boeing right now is prices trading above the top of a daily profile. You know, the last time that we saw Boeing trade above the top of a profile over a month ago was February the 6th out there. And so this is suggesting that Boeing has further to go to the upside, but go to where is really the question. So that's where we got to bring over Stevie's other charts out here. And now we know. Now, today is a bullish confirmation of the Rhodes Momentum Indicator bottom. That's this diagonal line that was moving down out here. And the reason that today is because today is a bullish reversal candle. It's called the bull separating line out there. Now, we know the price is traded above the top of its daily profile, but what we also know is that the key level of resistance is Stevie's red line, and that's in the 135-ish area. It's 134.93 on my screen right now. If price moves up, that's going to move up slightly. So you really need to see, Eddie, you really need to see a close above 135 out there to suggest a further move higher inside of Boeing. If you're asking me which of those three do I like, Apple, NVIDIA, or Boeing, the answer is going to be NVIDIA because it has everything that we needed to see out there. I'm not suggesting that you step into it, but if you're asking me which of the three has the best chart patterns, well, that's a no-brainer. That's a simple thing to look at. That's, in fact, what you and I just did. I don't think we have any other questions. Of course, I take that back. I've got one here from Michael, and wondering why gold has not stayed near $1,700. So when we come back from this break, for Michael and others out there, we're going to go try to answer that question. Why has gold sold off just a tad? And what does that mean? Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So for Michael P., we're trying to answer the question. He was asking the question, why'd gold stop basically in the 1700 area? Why hasn't it taken off behind that? And Michael, the only real answer that I have for you, technically speaking, is that what price did was it ran right into its weekly horizontal trading range, which is a level of resistance that has been tested over the course of the last month or so, and that is really held. And that's at that green horizontal line. So on this chart that we're looking at, I have both the turned on right now. I have both the monthly, it's a weekly chart we're looking at, but I have the monthly horizontal trading range levels. Those are in red, and then the weekly. And so the trading range inside of gold, you don't need me to tell you this, but I'll share it with you anyways. It's between 1,700 or 1,695 and 1,462 out there. So gold has run right up into resistance. If price could close above your 1,700 area, then what you'd be looking would be a run up to the 1,740 to 1,762. That is the next ceiling level from a monthly and a weekly horizontal trading range. So at this stage of the game, all gold has done is just make it back to a key level of resistance on a why that? What did I do? I got a problem out here. What did I do? Oh man! And now to try to figure out where is it? Oh, there we go. Okay. Got it. Okay. So I'm just going to pull over for Michael, for you, for all of us. It's a 30-minute time frame chart. Just curious. Oh, okay. So the second answer, all we have to do is just always do a little bit of investigation, Mike, and we can usually answer these for us. So on a short-term basis, when you take a look at that spike high at about 7 o'clock this morning, let's find out the exact time. This is a 30-minute time frame chart. So on the 30-minute time frame chart, 7 o'clock, yeah. What the pattern that was present was a TD9 count, bar number 9. So really not unusual. Now, what price did was it then pulled back to its first level of support. That was the bottom of its monthly profile, but price closed below that level. You see right now you've got a 30-minute base. You've got a bullish structured box out here, 1631, 1636. is the bottom, 1640 is the center, and 1679 is the top. But price is trading below Stevie's green line, so that's really resistance area there. But in answering your question, we know in looking at the weekly time frame charts, price hit resistance. On a 30-minute chart, price also generated a short-term topping signal. So I hope that answers your question with regard to Goldilocks and what it has done using Stevie's patterns out there. Now, I had shown the other chart here, which is how gold is trading in all of the major currencies. In terms of Great British pound sterling out there, I mean, I don't know if it's at a new all-time high. I think that it is. I think that it hit another even new all-time high, but I don't have enough time right now to pull back all the data or go to some monthly time frame charts. But it does look to me like gold priced in pounds is trading at a new all-time high. If you're going to buy an ounce, well, assuming you could find an ounce of gold out here, maybe you can't find an ounce of gold in Europe. Didn't I read somewhere that they have stopped in Europe? You can't buy gold? And dealers are not able to sell gold to retail investors out there. Germany. Thanks, John. So in Germany you can't. Well, basically that is Europe out here, and so you're wondering why gold is moving to new all-time highs in that currency out here, at least the commodity. Yeah, and when you can't buy gold, right? When the government tries to do that, what's that signal? What's that telling us? You've got gold up at its previous highs expressed in yen, gold up towards its previous highs in euros, gold towards its previous highs in dollars out there. Let's go take a look at some other signals out here. And let's go take a look at the New York Stock Exchange. Now, having a heck of a day out here, but this is dangerous too. Now, when I say a heck of a day, what do I mean? I mean that advancing issues right now are 2,732 and 240 declining issues. So that's a really strong day. But inside the New York Stock Exchange, in order for it to generate a bullish signal for you, you're going to need to see 2 days closes above its zero threshold line. Its zero threshold line that I'm referring to is the advanced decline oscillator. Difference between the 19 and 39 period exponential moving average of the advanced decline line. Right now, the reading is minus 18. So turning down from here, combined with spot volatility being above the 50-day, this is just, I got to tell you, if Congress doesn't act soon before the market close out here, we should see the markets pull back. Those are just simply the signals. And especially if the NQ loses ground with regard to its oscillator and change line. That's there. So I'll put this up here. And it's basically just trading just slightly above it. It could give that up in a heartbeat out here. So we really are in a, technically speaking, we don't have the confirmation of the bottom out here. Now, you might be saying, what do you mean, Steve-O? I mean, here, I'll show you just the opposite of that. Just signals everywhere. What do I mean by signals everywhere? Here, take a look at this data table. It's more than a data table. It's using Stevie's tools out here. And here you've got cash indices, the index ETFs, you've got the S&P 500 sectors, you've got the Dow 30 stocks out here. You even have what the current candle is. So in order to confirm, see these daily RMI signals, column number 4, from the left out here. Look at all these bottom signals or confirmations out here in order to be confirmed, to truly be confirmed, in order to say that the trend has changed and it's either a much larger counter trend rally or it's a bottom out here. Price really needs to be trading above Stevie's red line. Well, resistance, RES, inside the daily OEL tells us the price is below that level. Well, it tells us that price is below that level, and this down arrow tells us that we have a price oscillator that is below zero out here. So that's a real resistance level. But look at all of the bottom signals. Look at the many bullish reversal candles that we've got out here. The transports have got a bull sash candle. That's at the present time. The Russell bull sash candle. The semiconductors, boy, those look strong. The semis look really strong out here. They look the most bullish. of instruments or sectors, in essence, that I have looked at out here. So look at all these bottom signals that are present. So the market's communicating to us that it wants to do that. But in order for the generals to be right here, what we really need to see, or I would think at this stage of the game, what we really want to see is, double Guy confirmation. What the heck is that? Well, you certainly want to see that advanced decline oscillator above zero. You certainly want to see the daily charts, prices above the oscillator and change line. You really want to see the spot volatility index move below its 50-day exponential moving average out there. And those are all the things that we really don't have present at the moment out here. So as we go into this break, I'm just really trying to help you navigate. Look for something positive. Hey, here's our chart for the Dow, really replicating the crash of '87 when price found support at its logarithmic trend line from 1929 to 1966. That exact same trend line now is applied to 2000's top in 2007. So there's opportunities for a bottom, but maybe it's going to form over the next 5 or 6 weeks. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So this is kind of interesting. One of our listeners here, Don P., writes in. He says he's got a dental lab license. You can buy all the spot gold that you want. Don, what I was referring to is the folks over in Europe, and specifically Germany, that they are now no longer able to buy gold out there. So that should make you say, something to think about. Speaking of overseas markets out here, in fact, let's start with Germany. They generated a bottom signal today, a confirmed bottom signal. Now, the DAX itself formed a Rhodes momentum indicator bottom pattern out here, and today's close above Stevie's red line is suggesting that the DAX could move all the way up to 11,769. So maybe it's anticipating that there won't be a disappointment here in the U.S. I don't know if that's the case or not. The FTSE today also confirming a bottom. Rhodes momentum indicator bottom pattern out here. And again, with price closing above Stevie's red line, 52.35. This would suggest a move up to its breakdown area of 67.05. So you got two major markets that have identified a bottom. We have a third for you. You know, this is not a BOGO, buy one, get one. This is a buy one, get two out here. And if we take a look at the Nikkei forms a TD9 count bottom. It was the bar after bar 9 that formed the low, and price closing above 17,558 is suggesting to move to 21,061. So you got three of the five markets that are, and the other two being the Hang Seng. Let's take a look at it real quickly here, just to give you a view. Now in the Hang Seng, it does have a confirmed TD9 count bottom, the bar following number 10, but price tonight must close above 22,911 to confirm that bottom. And if so, you can see a bounce up to 26,408. That's its breakdown level. And then you've got the Shanghai. And the Shanghai out here has a confirmed Rhodes momentum indicator bottom. It's got a confirmed TD9 count, but what it doesn't have is a close above Stevie's red line, 29.18. Folks, great to be here with you as always. Stay tuned. 2 great hours are up next. Hey, I produced a special report today just for subscribers, and it's a special report that you will want to know about. Just go subscribe to Mastering Probability, even if for the next 29 days, to go review all of the great workshops that are out there and test drive the newsletter. Hey, have a terrific Tuesday. We look forward to seeing you tomorrow.